When we think about billionaires, it's easy to picture lavish lifestyles filled with luxury cars, sprawling mansions, and private jets. But behind the headlines and glamorous images lies a far more interesting reality: how the world's wealthiest individuals actually invest their money, and the strategies they use to not only preserve their fortunes, but grow them exponentially. While some tactics may be out of reach for most, many of the principles guiding billionaire investors can be adapted and applied by anyone seeking to build real, lasting wealth. Let's begin by understanding one fundamental truth. Billionaires don't simply invest for high returns. They invest for safety, diversification, and long-term growth. Their approach is typically guided by careful risk management, detailed research, and a willingness to think in decades rather than months. So, how do they do it? And perhaps more importantly, what can you learn from their playbook? First, billionaires are masters of diversification. Take Warren Buffett, for example, whose investments span everything from insurance companies and railroads to food brands and technology firms. The underlying philosophy is simple. Don't put all your eggs in one basket. For the average investor, this means spreading your investments across different asset classes: stocks, bonds, real estate, and even alternative assets. The goal is to protect yourself from volatility in any one area and to capture growth wherever it appears. But diversification goes beyond merely owning a handful of stocks. Billionaires often invest in entire sectors and geographies. Ray Dalio, founder of Bridgewater Associates, recommends the all-weather portfolio, which balances investments across stocks, bonds, commodities, and other assets to perform well in any economic climate. You may not have access to hedge funds or global ventures, but you can still build a diverse portfolio using index funds, ETFs, and mutual funds that cover different industries and regions. Next, let's talk about patience, a trait shared by nearly every billionaire investor. Most fortunes are built over years, not overnight. Jeff Bezos, for instance, famously reinvested Amazon's early profits back into the company for years, prioritizing growth over short-term gains. The lesson here is the power of compounding. By consistently adding to investments and allowing returns to grow over time, even modest portfolios can become substantial. This means resisting the urge to chase fads or jump in and out of the market based on headlines. Instead, billionaire investors stay the course, trusting in their long-term strategy. Another key strategy is the pursuit of asymmetric opportunities. Billionaires look for investments where the potential upside far outweighs the downside risk. Think of Peter Thiel's early investment in Facebook, a relatively small amount that yielded extraordinary returns. While you may not have access to the next big startup, you can still look for investments with favorable risk-reward profiles. This could mean exploring small-cap stocks, emerging markets, or up-and-coming industries where growth prospects are high but risk remains manageable. Real estate is another cornerstone of billionaire investment strategies. From Donald Trump's empire of skyscrapers to Oprah Winfrey's portfolio of luxury homes, property offers both tangible value and long-term appreciation. For the average investor, this might mean purchasing a rental property, investing in REITs, or simply owning your own home. Real estate can provide a steady stream of passive income, tax benefits, and a hedge against inflation. The key is to invest wisely, doing your homework, understanding the local market, and not overextending yourself financially. Billionaires also invest in private businesses. Many, like Richard Branson, have built fortunes by owning and scaling companies rather than just buying stocks. While starting a business isn't for everyone, you might consider investing in small businesses through crowdfunding platforms or supporting local entrepreneurs. Owning a stake in a private venture can offer higher returns and greater control, though it comes with added risk and responsibility. Philanthropy, believe it or not, is also an investment strategy. Bill Gates, for instance, uses his wealth to fund initiatives in global health and education, not only to make a difference, but to create lasting impact and legacy. Giving back can be a way to invest in your community, build relationships, and even unlock financial benefits through tax deductions. The lesson here is to think beyond financial returns and consider the broader impact of your investments. Leverage is another tool billionaires use to grow their wealth. By borrowing money to invest in assets that appreciate faster than the cost of borrowing, they amplify their returns. This requires caution and expertise, as leverage can also magnify losses. For everyday investors, leverage might mean using a mortgage to buy a home or taking out a loan to expand a small business, but it should be done with careful planning and a clear understanding of the risks involved. Access to information is a significant advantage for billionaire investors. They have teams of analysts, lawyers, and advisors to help them make informed decisions. While you might not have a personal team, you can still educate yourself. Read books, follow reputable financial news sources, listen to podcasts, and consult with professionals when needed. The more you know, the better your investment decisions will be. Tax efficiency is another critical element of billionaire strategy. They structure their investments to minimize taxes, using tactics like tax loss harvesting, charitable giving, and investing through tax-advantaged accounts. For most people, this means making full use of retirement accounts like IRAs and 401ks, holding investments for the long term to qualify for lower capital gains rates, and being mindful of the tax implications of buying and selling assets. Networking is a less obvious but powerful strategy. Billionaires often collaborate, sharing deals and opportunities with one another. Your network may not include Wall Street titans, but building relationships with other investors, business owners, and professionals can open doors and lead to valuable opportunities. Finally, billionaire investors are not afraid to seek help. They hire financial advisors, attorneys, and accountants to guide their decisions. If you're serious about building wealth, consider working with professionals who can help you craft a personalized strategy, navigate complex financial issues, and keep you on track toward your goals. In summary, while you may not have billions to invest, the principles guiding the world's wealthiest individuals are surprisingly accessible. Diversify your investments. Be patient. Seek asymmetric opportunities. Consider real estate and private businesses. Give back when you can. Use leverage wisely. Educate yourself. Optimize for taxes. Build your network. And don't hesitate to seek professional advice. Wealth, at its core, is built on discipline, knowledge, and a commitment to long-term growth. By borrowing the best ideas from billionaire investors and adapting them to your own circumstances, you can set yourself on a path to financial success, one thoughtful decision at a time. The journey may be long, but with the right strategies, your goals are well within reach.